Something huge is happening in global finance. And you know what? It isn't starting in New York or London. It's actually happening in the Gulf. A whole new financial architecture is being built from the ground up, on-chain. So let's dive into how one single transaction kicked this whole thing off.
So get this. In early 2026, something pretty remarkable happened in Saudi Arabia. A property deed was transferred, but instead of taking weeks, which is normal, the ownership and settlement happened in seconds. I mean, that's just a staggering leap in efficiency. And this wasn't some little experiment. It was a huge signal of what's coming next. And you've got to understand, this wasn't just a technical pilot running on the side. No, this was the real, official system evolving right before our eyes. It signals a much, much bigger strategic shift in how the entire region is thinking about capital markets.
But we're talking about so much more than just selling property faster. The goal here is a completely new financial architecture. Just imagine a system where everything, from a property title to the revenue from a solar farm, can be issued, traded, and settled instantly on these shared digital rails. That's the end game.
So you might be wondering, how is the GCC moving so fast on this when other parts of the world are still just dipping their toes in the water? Well, the answer comes down to something we can call the sovereign advantage. It's this unique strategy that's completely changing the game for adopting this tech.
At the heart of it all is this idea of sovereign alignment. See, unlike in other places where you have startups trying to convince the system to change from the bottom up, this is a top-down coordinated push. You have government ministries, financial regulators, and these massive sovereign wealth funds all on the same page, embedding this technology directly into national policy. It's kind of the secret sauce that just removes all the friction.
And when you compare this to how things are done elsewhere, it is night and day. In other markets, you usually see private companies running their own little experiments, they hit regulatory walls, and progress is just slow. The GCC approach is the total opposite. It's state-backed, it's fully coordinated, and that leads to incredibly fast adoption.
So, with this powerful model in place, where are they actually applying it? Well, the strategy is now being rolled out across the region's most valuable and really most strategically important assets.
And it makes perfect sense to start with real estate. I mean, it represents a massive chunk of private wealth in the Gulf, but it's also famously illiquid, which is just a fancy way of saying it's hard to buy and sell quickly. Tokenization is seen as the key to unlocking all of that trapped value.
And the impact here? It's huge. By tokenizing property, you immediately solve that illiquidity problem. It allows for fractional ownership so smaller investors can actually get a piece of major projects. This, in turn, gives developers access to a way bigger pool of capital, opening up markets that were once pretty exclusive. And of course, it makes the whole settlement process almost instantaneous.
But they're not stopping with buildings. The next major frontier is the energy transition. The Gulf has some of the most ambitious renewable energy goals on the entire planet, and this financial innovation is being put to work to help them get there.
I mean, just think about the insane cost of mega projects like NEOM's green hydrogen plants. How do you even fund something like that? Well, tokenization offers a pretty direct solution. It lets investors buy smaller, compliant digital shares in, say, a solar park or a wind farm. It can even automate the revenue payouts using smart contracts. This brings in money from all over, not just from the usual banks and state funds.
And the third key area really shows how adaptable this whole strategy is. It's being used to modernize Islamic finance, which is a massive global market with its own unique rules based on Sharia law, like prohibiting interest-based transactions.
To get a sense of the scale we're talking about, just look at this number. The global market for Sukuk, or Islamic bonds, is over $200 billion a year. Capturing even a tiny fraction of that on-chain would be absolutely transformative. So this creates what you could basically call the digital Sukuk. It means you can issue and trade these bonds on a blockchain, you can break them into smaller pieces so more people can invest, and you can settle the transactions instantly using digital currencies. This lowers the risk for everyone involved and really positions the GCC to be the future global hub for digital Islamic capital.
Now look, as exciting as all this sounds, it's not all smooth sailing. To really get the full picture, we have to be honest about the structural hurdles that still need to be cleared.
There are really four big ones. First, you've got regulatory harmonization. The rules still aren't the same across all the different GCC states. Then there's the need to build deep, liquid markets. You need big institutions to buy in and start trading. Third, cybersecurity. Securing national-scale digital infrastructure is a monumental task. And finally, you have to make sure these new digital assets get the green light from various religious boards for Sharia compliance. That's absolutely crucial if you want this to scale.
Okay, so with those challenges on the table, let's zoom back out and look at the big picture. How this whole strategy is basically redrawing the global capital map and what the GCC's competitive position really looks like.
I think the most crucial thing to take away is this. This is not some fleeting tech trend that's being driven by a bunch of startups. This is a deliberate, long-term modernization of capital markets, and it's deeply woven into the national economic visions of countries like Saudi Arabia and the UAE. And that combination is what creates their global edge. You've got centralized policy, really tight coordination between all the key players, and these enormous sovereign wealth funds that can provide liquidity and signal trust right from the start. It creates this powerful, integrated strategy that, frankly, very few other regions can even hope to match.
So looking ahead, the roadmap is getting pretty clear. We saw the first state-backed property deeds in 2026. Now, through the mid-2020s, the focus is expanding to energy and Islamic finance. And the grand vision for 2030? A fully interoperable on-chain system where capital can form and move across the entire region with unbelievable speed and efficiency.
This whole transition is happening incredibly fast, and as the GCC builds this new system, it really forces us all to ask a critical question. It's not just about if this bold vision is going to succeed, it's about what it means for the traditional financial centers of the world and who might get left behind in the process.